Views from Akash Prakash, CEO and MD at Amansa Capital, who spells out his outlook for markets in 2014 and tells you the top names that you should be betting on.
The worst is over for India in the sense that, I was for a long time arguing and cribbing about policy paralysis and the government not doing anything, etc., etc. And I think that's now conventional wisdom and everyone talks about it, and the Western media even now keeps lambasting India for this problem or that problem. But I think things have actually changed. This government in the last 6 months is starting to take decisions. I think we have hit an inflection point on economic growth. I think we are soon to hit an inflection point on interest rates. I think we're hitting an inflection point on the rupee we've already hit. So I think the environment for India is getting better. It's not yet fully recognized, but I think if you ask me today, over the next 2 to 3 years, I think India will do a lot better than it did the last 2 to 3 years. And I think people are missing the fact that this government, because there's been so much negativity built around it, I think in the last 6 to 9 months they have done stuff which people are not recognizing or giving them credit for. So I think the worst is over for India in my view.
But the grain of truth is that earnings are still contracting, earnings are not expanding. If I look at the anecdotal evidence of the IIP data or Q2 numbers or the kind of margins India Inc. has reported, there is no evidence that we have an economic bottom in place.
No evidence yet on the earnings side, but I would say that the last quarter was the first quarter in 9 where earnings met expectations, right? So number one. So the first is to at least get the earnings expectations meet them. Other 9 quarters in a row, India Inc. is consistently disappointed on earnings, and you had a constant cycle of negative downgrades. So I think both the cycles, the cycle of constantly revising downward GDP growth, which has happened for the last 2.5 years, every quarter GDP growth estimates have gone down, as well as and interlinked with that, the constant cycle of negative earnings revisions. I think both are coming to an end. I think if you look now for the next 6 to 9, for the foreseeable future, you will see earnings getting revised up and economic growth estimates getting revised up. That's my view at least. I think the cycle of negative revisions in India is now coming to an end. So it may take another couple of quarters where it bounces around here and earnings don't show any significant change. But the feeling that again you have to cut earnings estimates, again the market is not as cheap as it looks, or the numbers are wrong, I think that has come to an end. I think the last quarter was significant in that first time in 9 quarters earnings met estimates for the first time. There was no negative revision. Also, if you look at the sell side, even all the major investment banks, their cycle of cutting GDP estimates also has ended. In fact, you're starting to see the first signs of people revising up GDP estimates also.
But are markets already factoring in this uptick, because we are almost at 22,000 on the Sensex, 6,200 on the Nifty. Small cap stocks, mid cap stocks across the board have appreciated by 25 to 30%.
Yeah, but I think that's partly because the mid cap and small cap were massively oversold. If you go back to see July, August, when the last scare on the macro on India came in the rupee, mid cap, small caps were just battered, and they've been battered for the last 2 to 3 years. So I think that there is some element. I think it's like the first stage of a bull market. Some people are recognizing that things are actually getting better, not getting worse. That's the beginning of people getting more comfortable. I think there's some realization of that starting to seep into the market, but I don't think it is by any means a consensus outlook right now that economic growth over the next 12-18 months will accelerate, or that earnings will be better than people's current expectations, or that interest rates will start coming down. I don't think that's yet consensus expectation at all.
Akash Prakash rarely speaks on media, but when he speaks, he's always got something big to say.
I wish, no.
What are your key assumptions for 2014?
Well, I think one obviously big assumption is the election, right? So I think our view is that hopefully either BJP or Congress will form the next government.
Doesn't matter who's coming.
No, I think frankly, I think the market obviously would prefer BJP. I frankly am a little bit indifferent, because I think even the Congress has now understood that what happened the last 12 to 18 or last 2 years before the last 6 months, where there's utter chaos in government and nothing was happening. I think they've also understood that the damage that has caused to the economy, the damage that has caused to their inclusion agenda is quite significant. And frankly, there's no space. Whichever government comes now has to address the fiscal deficit because of the risk of a downgrade, has to address the current account because of the constant need to reassure global investors and keep getting dollars in. So I think whichever government comes has a tough 12 to 18 months of bitter medicine to swallow, whether it be BJP or Congress. So while the market would prefer BJP, I think even a Congress government may not be that bad. But if you get a totally fractured mandate, you get a third front supported by the Congress from outside, as some people talk, I think that is bad news. That I'm not factoring in. If that comes, then I think there is downside to the market. But otherwise, if either BJP or Congress comes, our view is that over the next 12 to 18 months, economic growth will get back to somewhere in 6.5%. Inflation will come down. Interest rates will come down. The rupee will be stable between 62 and 65. And we think earnings growth will accelerate from here. So you've had, 3 years of almost no earnings growth. I think you'll get back to 12 to 15% earnings growth next year at least, because the real effect of the rupee depreciation will now start coming now. Most of India Inc. has not really seen the full benefits yet because they've been hedged, and it takes about 12 months for the full benefits of the rupee depreciation to reflect in volume, market share gains as well as profitability.
So if you're making a case that Indian economy could bounce back, corporate earnings have bottomed out, how come your current portfolio still smacks of IT and pharma? Because these are global sectors.
True, but I think if you look at our IT stocks, we own, all of them are trading at 12, 13 times, so they're not expensive. So, it's something where we're not playing it from a defensive trade point of view. We've had a view for some time the rupee will be in this range of 62 to 65. The market till very recently was not willing to pay the IT companies on even 60 rupees. They were thinking, rupee will go back to 50, which I think is never going to happen. So the stocks were a lot cheaper than in our minds than what the market thought. So at 12, 13 times, I would pay that all day, because we think they'll grow at 12, 15%. ROEs are 30% plus, return on invested capital is 60, 70%, free cash flow generative, good management teams. So that's on the IT side. On pharma, we own two stocks, Lupin and Cadila. Lupin we think is just an outstanding business, great execution, has a real chance to build a really world-class generic business, can become the next Mylan or something like that. Cadila is a case of execution. 3 very difficult years, have not executed at all. We think that they're now coming into an environment where the worst of all the investments they've made, which are generating zero return today, will now start kicking in. So Cadila is an execution story. We have to see. We hope we're right. But that's why we own these two. But if you look at, just to some of the which is where we think IT is clearly cheap. Pharma is, trading at 17, 18 times. Not cheap, but we think great visibility, and we think real chance to get to the next level in both these companies. And we have stuff which is cyclical, which is, whether it be Thermax or Maruti or Hero. So we have both. What we don't own is FMCG, which I've said for a long time. I thought that they were, clearly overvalued and overhyped. And I think that, you see from August in the market bounce that FMCG has had a difficult time delivering any returns. I think that will continue.
But if economy comes back, spending patterns could also improve.
Could. But I think the reality there is FMCG was trading at such a high valuation because people were paying a very high premium for earnings visibility, because the reality was in the whole slowdown, the only sector which really delivered earnings pretty much as per initial expectations was the FMCG sector, because the rural consumption was the only part of the economy which really held up, right? Private sector investment collapsed, exports initially collapsed. The one part of the economy which held up which is why we still grew at 5-6%, was because of consumption. So the FMCG sector delivered more or less the earnings people thought they would deliver, probably the only sector which did that. And therefore people were paying a very high price for that earnings visibility. I think if I'm right that the economy starts to improve, then the visibility of earnings or more sectors will start delivering delivering to earnings expectations. And therefore I think money will move out of FMCG into the other stocks and sectors which are quite cheap, much cheaper.
But the top-down India story is still the demographics. It is still the young Indian population. So how are you betting on consumption then?
No, we are, but we're betting indirectly. Like, car demand is consumption, right? Maybe higher consumption. We're betting on media, for example. We own a lot of stocks in media. That's a clear derived play on consumption. So we think FMCG are great businesses. There's no doubt on that. It's just that I think they were over-owned, overhyped, and too expensive. So at a particular price, I would love to buy an FMCG company, but I'm not going to pay 40 times for it. If it comes to 20 times, I'll look at it. Yeah, definitely.
My compliments on how you identify Tech Mahindra. It's been an absolute brilliant multi-bagger for you. Are you still happy to own Tech Mahindra? It's at 1800.
Yeah, we still own it. It's still trading at 12, 13 times. We think they are executing well. I think they have some significant growth traction ahead. I think the worst of the BT issues are now more or less behind them. They took a big hit on the pound weakness over the last 3 to 4 years. Pound is strengthening. That's a big tailwind for them. And I think the Mahindra Group has shown that they are able to build good businesses and scale them. So I think this has still got legs.
So for an average viewer who wants to benefit from your wisdom, the message is that IT is still looking cheap.
I mean, specific IT. Like, we don't own, TCS and TCS because these are a great company. I mean, we know TCS, we owned it a lot in the past. It was our biggest holding in the financial crisis of 08, 09 when it was trading at 9, 10 times. I think it's an outstanding business. Just now it's expensive, 17, 18 times, and, it's pretty much reflecting people's expectation. I think the mid-cap stuff trading at 12, 13 times, or even TechM, which is trading at that similar level, is just got, more scope for I would say P multiple expansion.
Where does bank fit in the overall scheme of things for you?
Well, we continue to own private sector banks. So we own, we own IndusInd, we've owned that for 5-6 years. We continue owning that. We have a big position in a company called Chola Investment and Finance. We think, Velayan, who runs it, the younger Velayan, is an outstanding CEO. He's really building a good business. You talk to him, he talks all the right stuff in terms of how to scale the business, how to cut costs, how to imbibe technology into the business model. So we think it's a very good long-term holding. So we own a lot of Cholamandalam Investment Finance. We own IndusInd. We bought Federal Bank recently. We think Shyam is nearing the end of, cleaning up all the legacy bad assets of the past. I think over the next 2 to 3 years, that will be a good investment because it's trading at PSU bank multiples, but it's clearly got private sector bank management.
The book quality is a concern, one would argue.
It's a concern, but I think the worst of that is over. I mean, the reason why it's trading at book is because people don't believe the asset quality. But if you talk to them, I think they feel that they're probably maybe a couple of quarters away from the worst of that being over. And they had some bad luck. I mean, NAFED, for example, which is a Government of India owned entity, went bust. Or has gone NPA on them. It's unlikely, you would normally not expect an PSU government, 100% government owned to be an NPA. So, I would say that kind of questions, what are the quality of government assets all the banks have got if a PSU like NAFED, 100% owned by the central government, can go bust. So they had a bit of bad luck on stuff like that. But I think he's doing all the right thing. I think it's probably the only old generation private sector bank which is genuinely attempting transformation. They may fail, but I think the valuation you're buying it at doesn't, ascribe much. The margin of safety is quite high. You're not paying for the transformation which I think is happening.
I looked at one of your top holdings in the morning and it was Eicher Motors. How did you identify that? It's about 8x and more than 8x.
More than 10, 12x.
It's even a 12x for you.
Yeah, 12x for us. We were lucky on that one actually. No. I mean, to be fair, Siddharth and team have done an outstanding job of execution. When we bought the company, we were actually paying the value of cash on the balance sheet. It's a classic Graham and Dodd. I mean, you sometimes think you wonder how you get these stocks. I should have sold my house and been on in hindsight. So we were paying just the value of cash on the balance sheet. But the way they've, brought in Volvo, the way they're building out a long-term truck business, engines, exports, domestic truck business, very strong position in LCVs, targeting double-digit market share in medium and heavies, new generation platform just coming now. And then the Enfield. I mean, Enfield has been the real surprise. I think, when we bought the company, they were selling something like 25,000 Enfields a year. They sell that a month now. And there's a waiting list. And there's
3 months.
Yeah, 6 months.
Tell me about it. I wanted to buy one.
So 3 to 6 months. And people don't realize that if they're able to genuinely build Enfield into an export engine, export profitability is 3x domestic profitability because the price points are much higher in the export market. So I think in hindsight, Enfield is just a very, very powerful business which is really playing into all the demographics, yuppie, rising aspirations of Indian consumer type of theory. And I think the truck business is right on the bottom of the cycle, but they're doing all the right things to build a really solid long-term truck business.
So you did not sell your house, you did not buy Eicher. Are you getting that chance again? Which is one stock where you're ready to sell your house and bet in?
No, at the moment there's nothing like that. I wish, because these always work out by hindsight that the turn is so big. No, I think nothing of that level of conviction now. And but we are happy with our portfolio. I think that unless we get a real shock in May 2014, which could happen because, election is a difficult call, and I don't think it's going to be as easy for the BJP as some of the market participants think. I think there is volatility around that and uncertainty. But otherwise, I think India will do well. I think, again, I could be wrong, but I think there's a 50% chance that we'll look back on this and say the bull market began in August of last year. Because the market's up about 20-25%, people don't realize already in the last, 3 months from the lows of, July, August in dollars. There's a chance that we may look back and see that is the starting of a bull market. I think that's a reasonable chance if the elections don't throw up a real googly.
For a real bull market to thrive and survive and roar, apart from attractive valuations, earning visibility, you need a lot of money, which is global liquidity. a month ago the world was divided on what tapering could do and how should one read into the Fed commentary. But now the understanding is that Fed is going to be more like a storm in the teacup.
Yeah, I think so. One is that the Fed has very clearly been able to convince people that tapering is not tightening, right? So which was the shock in July, August. I think they managed to convince through their discussions and commentary that there's a big difference, and we're still a long way away, maybe end 2015 at earliest in terms of tightening, number one. Number two, to a certain extent, if the Fed is tapering, you're seeing the Bank of Japan stepping up to the plate. So that's also liquidity. I mean, liquidity ultimately is seamless, right? It doesn't matter whether the Bank of Japan is creating it or, there's some difference in terms of willingness to invest overseas. Mrs. Watanabe, as they call it, is maybe less willing to do it. But the way that Japan is constantly pumping money and wants inflation, I think you will see money coming out of Japan as well. And I think the ECB also at some stage is going to do some type of it may not be, taper, QE type of thing, but the ECB is nowhere near, tightening anything. Europe is still, economically challenged. So the global environment for liquidity is not dramatically worsened. I think it's maybe gone slightly worse, but not nowhere near anything dramatic. So I think flows to India will be reasonably good. I think people do think that India, has a chance of getting its act together, that over the next 2 to 3 years India could regain some of its growth mojo. And people are looking for places where they can deploy capital where growth is accelerating. And there are very few EMs where that's really going to happen, where you can still put your hand on heart and say there is a structural long-term story, it's got decent quality companies, it's got size, I can invest money, and I think over the next 2 to 3 years, things will improve. Growth, inflation, interest rates, all the stuff we talked about. So I think India is in a good position if we can capture, we have a huge tendency to shoot ourselves in the foot, unfortunately, and that could always happen again. But I think the odds are lining up that India could be entering a good phase for its markets.
So if your view is that global liquidity is abundant, we will not starve for liquidity, genuine growth is making a comeback, our economic problems are in place, is India in a better position relative to other emerging markets? Are we the land of one-eyed man in a land of blind?
It depends on, China, there's still a split view, right? I think that China's, what they've announced, the reform program is quite significant. Xi Jinping seems to be very serious. He seems to have full control. So it could be a surprise. I think China could do a lot better than people think, and it's been a market which has done nothing for the last 5 years. So that could be a real opportunity as well. But compared to Brazil, I think India is doing far better. India looks to be in a much better place compared to a lot of other EMs as well. So I think India is, in people's eyes, an interesting place to look at.